Money Sense, bringing an informed financial perspective to the Cayman community.
Radio Cayman, maintaining the innovation.
A very good morning and warm welcome once again to Money Sense. I'm Simon Caudry and I'm joined this morning in the studio by my co-hosts Emil Kalinowski. Emil, good morning.
Good morning, Simon.
And congratulations.
Thank you very much. The letter writing campaign and protests outside did not stop me from getting on the air again. That must be what you're referring to.
Yes, that as well. The 5 hours marathon completion.
Oh, yes. Thank you very much.
Congratulations on that. And Dr. Amy Hubble, good morning.
Good morning.
Any marathons in your...
Sure did not, but I thought of Emil on Sunday morning when I woke up, and I thought, I bet he's doing great.
I reckon by the time you'd woken up, he'd finished.
It's probably close to true with those 5 a.m. starts. But no, that's awesome.
Well, congratulations anyway, Emil. So today's show is going to be a review of what happened in 2019. We are still in 2019, so there's still room for error, and a brief look forward to 2020. Let me then remind everybody who we all are. Emil is a CFA charter holder who works in the industrial and precious metals industry and follows macroeconomic trends. And Dr. Amy is a CFA charter holder as well and an investment advisor who focuses on long-term investment planning for individuals and families. Right, we are going to start and review how embarrassingly poorly we did last year, so no reason not to start with you, Emil. Do you want to... Do you want to talk to us about what did you forecast for 2019 and how embarrassing and how did it go?
I didn't think it was too bad, but you guys hold me to account. I suggested that the global economy would slow because of a persistent banking crisis, and I believe that the global economy did slow. Reviewing last year's opening show, or this year's opening show, I did say that the consequences would be political and social. So I would say there would be a demerit there because we haven't seen anything politically or socially, I believe, on a large scale. Although there have been protests, so perhaps
South America has seen a lot of protesting,
and in other places like Beirut and Iran and Hong Kong. So
and France, but that's France. They always protest.
They're always protesting, right?
A lot of French people there. So
what, in France?
Well, it was a terrible joke at this morning, early hour. But the point is that was my general outline. It was that we would be expecting a slowdown in economic activity, and that would be a bad one. I think I did well.
Yeah, I did actually write down exactly what you said, just to make sure that we all were held accountable for our forecast in January. And your quote was, 2019 will see another contraction that is part of an economic depression that the world fell into 2008 and never recovered from. Now, the world returned on the equity side over 20%. So explain yourself, Emil. How did you not be able to predict that?
I definitely stay away from the equity markets. I leave that all up to you, Amy. The equity markets are up, definitely, but the world continues to be in an economic depression. And a great example of that would be comparing where we are in year 12, since 2006, to where countries such as the United States, Canada, United Kingdom, and so forth, South Africa, any number of countries, where they were in year 12 of the Long Depression, which started in 1873 and went to 1896, and the Great Depression, which started in 1929 and went to 1947. And I just happened to do that analysis the other day, and wouldn't you know it, 70% of the countries that have data for those three time periods are either on trend or below trend of a depression, meaning there's 29% of countries that are well above where they were in year 12 of the last two global depressions. I hope that makes sense. If it doesn't, please hold
No,
me to
it makes
account.
sense, but maybe just clarify just for our listeners, just kind of the difference between, and I'm with you 100%. I do think that we did not really see any improvement in economic data per se. However, in terms of things to invest in, you really had to be dumb not to make money this year. There was almost no asset class from January 1st through December 11th that had any negative returns on a year-to-date basis. So explain kind of what you mean by kind of the difference between the investment universe and the economic universe, and what that possibly means. I don't want to forecast yet, because I'm sure we'll do another show, but what that probably means on an indicator, or what that's meant in the past.
Well, it means where's the economic opportunity? The lack of economic opportunity is what a depression is. And it doesn't mean that there are negative quarters of growth endlessly. It just means that the growth, such that there is poor or meandering or flat. And that's what we saw in both the Great Depression and the Long Depression, and we're currently seeing is just no upside. The downside is gone, and a lot of people look back at the Great Depression because that was the last depression that we all experienced on a global scale, and they remember the breadlines, the unemployment, the upheaval. It was terrible, and that's what people associate with a Great Depression. But that doesn't have to, that's the contraction. That contraction is well in our past. It wasn't nearly as bad as what we had seen before. But what we are replicating with those last two depressions is no upside, no growth, modest plus 1% growth per year on a real GDP per capita kind of basis, year after year after year for 12 years. And that's not what the normal post-World War II experiences, which is a V-shaped recovery, downturn, V-shaped recovery, versus what we are now, which is an L-shaped recovery. No longer going down, but just never really recovering.
But maybe we're in, and I hate to use the new normal term, but maybe we are in a new normal where we can't really expect for at least the gross global GDP to grow at the pace that we have historically grown at, just because of maybe population issues or probably monetary pressures too.
Yeah, maybe we are in a new normal, and Japan has been in that new normal for 30 years.
Yes.
And they're a very cohesive society, and they have managed to navigate this 30-year depression. That's what I'm talking about, depression. If anyone has a difficult time of imagining what I'm saying, depression, look to Japan. It's not the end of the world, is it? But no growth. But the question is the rest of the world as cohesive a society as Japan? And I would say no. And so the new normal, yes, it's going to exist, but probably it's probably unacceptable in democracies. And they will be looking for answers, solutions.
I'm going to throw caution to the wind.
Yeah, what say you, Simon?
And I'm going to break a habit of a lifetime and agree with Emil here, which leaves us all a little bit feeling
dangerous.
Feeling a little
December
dirty.
12th, 2019
Yes.
AD,
7:38 a.m.
Right. Well, there you go. I think Emil's got a point, and it links in actually something that I muttered about at the beginning of this year, which was corporate profits, and your point about equity markets having done very well, in fact, most asset classes having done very well, is unambiguously correct. The facts are what the facts are. But markets can behave differently to how the real economy behaves for potentially extended periods of time. And although one can do the science and say, well, in the long run, the value of a company should be the present value of the cash flows it's generating, and therefore if profits are going down, that should reduce the value of that company. Stock markets don't always behave in that sort of long-run, rational sort of way. And it's potentially the case that that's what we've experienced in this last 12 months, where people have been inured to profitability because corporate profits have gone down substantially in the US. There's been 2 consecutive quarters of corporate profits declining by a substantial amount, unexpectedly large numbers. Now, some might say that's because of trade issues, where the Congress and the President of the US are anxious about protecting, inverted commas, domestic jobs. Obviously, their economics is foolish, but that's what people think, that you can protect domestic jobs by cutting yourself off from the world. But it could also be the case that companies have seen higher costs because of labour costs. People have had to be paid more in terms of wages and salaries, or because demand has just not been there as expansively as it might have been in the past, because free money, interest rates were a little bit higher and the cost of doing stuff had increased. But it's absolutely the case that companies in the US in aggregate were making less money in 2019 than they were in 2018, and that is an unusual situation to be accompanied by a booming stock market, which is what we saw. Stock markets are up 20-odd% in most cases. So that's a slightly curious situation. It could be the case that stock markets are irrational. It could be the case that stock markets are forecasting something to happen in 2020, a nice recovery, and that all things will be cleared out and the world will be fine. Or it could be that we're potentially on a precipice of something rather more unpleasant. I don't know which one of those is the case, but Emil's unambiguously right, where companies aren't feeling the joie de vivre that you'd normally expect them to feel when stock markets are doing this rosily. They're not starting to see the tills flush with cash. The high street, the shopping centres, stores, companies and stores are closing more often than one would expect at this sort of stage of an economic recovery. So it's not all healthy out there. But there's this odd thing called the stock market, which is a barometer of personal opinion, and not always a barometer of evidence and profitability. So that's a curious disconnect, and I think it's something that as we go into 2020, we need to be increasingly mindful of, because it's absolutely fine for stock prices to go up 20% if profits aren't. That just means that the thing you're buying has become 20% more expensive, or potentially more than that. And that doesn't make it wrong. It just means you need to be more careful, because presumably the more expensive something becomes, at some point it reaches a price where it is too expensive and therefore causes stress and strains for investors. So I think Emil's right that we are in a strange time period where people aren't unhappy, or people aren't unhappy as expressed by what markets are showing, but the subtext of the mood on the street is far more anxious and far more depressed than that, and you see that in the expression of political will and political ambition. You've got a Marxist in the UK who's not leading, but who's potentially has the capacity to become prime minister. You've got
that's today, right?
Oh yes, yeah, quite. Give it another few months.
Years was not enough time
right now.
But you've got indeed. But you do have a self-confessed Marxist in the UK who's standing in second in the polls to be prime minister, and then you've got a self-declared socialist in the US who is, I think, either top one or top three.
Democratic socialist.
Socialist is the same word whether you add another word before it or not, and all of those policies have evidently failed as policies to stimulate economies. Marxism didn't work, socialism didn't work. That's not to say that there are not better ways of organising a capitalist society. It's simply to say the philosophy underpinning that is being proven to be bunk. So you've got this level of discontent, which is surprising to those of us who inhabit the rarefied world, if you like, of markets. It doesn't seem like it's bad. Markets are going up, but actually out there in the real world, and I think we are all guilty of not experiencing the real world often enough. It's not quite so good, and that's something, to Emil's point, that we should be very mindful of.
Yes, absolutely. And I assume we have to take a break soon, but those numbers are a little bit misleading, even on the returns of the stock market. And obviously when we talk about real world for me, because I am a professional investor and I invest for other people, really depends on the action and the performance of the stock market. But when you think about a year when you have 20% return, last fourth quarter of 2018, it was almost like a mini recession. We had a very steep downturn in the fourth quarter of last year, and then we had a remarkable run-up in the first 3 weeks of this year. So sometimes it is a little bit misleading to look at stock market returns on kind of arbitrary 365-day periods. Even when you look at a stock market return on a 12-month.
She's advocating for a different calendar system. I like this.
Well, I'm certainly not. You do have to look at stock returns, but stock returns don't always believe in the calendar. I don't know that they follow the Chinese calendar or our calendar, but trying to just kind of pin it in a year is sometimes unfair, just because we saw such a terrible December and such a great January. I mean, we had an excellent last November, 3%, but to me, the whole year was just kind of buoyed by a tug of war back and forth between will we or won't we get trade deals around the world. And I think at this point, China said, we'll wait you out. If it turns out that you win the election again next year, and this continuation of populism continues around the world, then we'll reassess. But I think that their opinion at this point is we can wait you out, and they probably are right about that.
They can play the long game. That's certainly true. And for those of us who have a difficulty translating from American English to English, buoyed was the word you're looking for, not buoyed. Anyway, we need to take a short break and recontinue this conversation in 60 seconds with Emil, Amy, and my good self.
Radio Cayman, maintaining the innovation.
On a daily basis, making it easy to connect with you, our listeners. Add us to WhatsApp today, 925-3261. That's 925-3261.
Radio Cayman.
Send a text or voice note.
Can I send a request, please?
You don't really have to ask us. Just send a request.
This is a shout out to my ex.
Radio Cayman, the voice of the Cayman Islands.
Radio Cayman, maintaining the innovation.
This is
Money Sense, bringing an informed financial perspective to the Cayman community. Brought to you by the CFA Society Cayman Islands.
And now, more Money Sense.
Welcome back to Money Sense. This is our show where we review 2019, hope that it ends soon so that we don't embarrass ourselves with saying something which is proven to be contradictory or absolutely incorrect in the next 2 weeks, and prognosticate on a little bit on 2020. Now, Emil asked me to make a few comments about something I said at the beginning of this year, which was, and I've already tried to persuade him that I only talked about corporate profitability, but he rather ungainly and undesirably mentioned that I muttered about Bitcoin at the beginning of the year. And he's right, but in fairness, Emil, I did talk about Bitcoin in the context of 2018. However, in 2018, I suggested Bitcoin was something that was thoroughly undesirable, unnecessary, and if it went to zero, no one should be too worried. It did go down 76% in 2018, which made me feel all warm and fuzzy. However, it staged a bit of a recovery in 2019. Year's not over, so let's just be clear on that one. But it's up a relatively small 96%. So that's.
We'll give you points on that.
Well, but in fairness, as I say, I didn't make any forecasts about it. All I'll say is that until someone explains to me what its purpose is, and we perhaps need to get Adam back on the show to discuss this, but I still really don't understand, other than if you're a terrorist or a criminal or a drug dealer, what the point of having Bitcoin is. It seems to serve no useful purpose, and until someone can justifiably explain how it solves a problem in the world, I continue to remain unconvinced by its merits.
Well, I can think of a problem. I was just at Foster's at 9 p.m. the other night, and the line for Western Union at that time was, wrapped up from the exit door to the beginning door. And it just, to me, seems like there has got to be an easier way to send currency or money or some suggestion of money cheaper and faster than Western Union. And
though there absolutely are many easier, quicker, faster, cheaper ways, but the incumbent banking organizations benefit from the existing network. And they make a monopoly profit based on something which the architecture hasn't changed since I think the 1950s. The SWIFT system for banks is archaic. It sort of works, and it's controlled out of Switzerland, so the US can't get its grubby paws on it.
Well, that's what I mean. I think there does need to be a better, and I'm not advocating for Bitcoin. Let it be known. Certainly not an advocate for buying Bitcoin. But if you could have something Bitcoin similar that could be stable in the markets, and that would be my problem with Bitcoin is not a stable price, and it's not really an appreciating asset either. But if you could have a decentralized exchange of money, you probably can think of a term that would be better for it, that could be more accessible for global transfers of money. I think that's a good thing.
No question. We need a better system of transferring money around the world, but what Bitcoin does, and it's not even a system for transferring money. You can't do more than a small number of transactions per second because of the architecture of it. That seems to me to be a fundamental stumbling block in making something a medium of exchange. And then if something as a medium of exchange is something that goes down 76% and then up 96%, that again is not a store of value.
Exactly.
And I'm going to go and rather bore our thousands of listeners and say that there are three principal definitions of something that is functional as money. Store of value and medium of exchange are probably the two most important. And Emil, the third is?
Unit of account.
There we go. Thank goodness
Which
you
no one
remembered.
really knows what that means. But it's just the way we measure, whatever
Yes.
we measure our economic activity in.
Yeah. So, look, Bitcoin 2020, I hope it goes to zero. I hope it disappears. And I hope I never have to talk about it again. But I'm sure there will be people out there who will still nonetheless continue to invest in it. And good for them. If people get their kicks in strange and unusual ways, that's all fine. But I want to be categoric and as clear as I possibly can be in case there was equivocation earlier. That's not to suggest that crypto assets and cybersecurity and cybersecurity and cryptography is not a useful and valuable tool for the future. I absolutely think it is, and I think that technology based on cryptography is incredibly valuable, incredibly important, and something that we should all pay much more attention to. Although, here's a far-off prediction for you, Emil, with the now first ever fully functioning quantum computer. It raises the interesting question as to whether cryptography actually can possibly exist and whether you can actually safeguard anything, because now it's possible to do in, I think, 5 minutes what used to take, 1.3 million years to solve a particular equation. And so that leads to a rather undesirable situation for those who are in favor of cryptography, which is things are no longer secure if they can get quantum computers working efficiently. So be warned, people.
That's a different show.
All right, I'll be quiet now then. So what do you guys have on your agenda for 2020, and what do you think it might lead us into? Or do I have to talk about Brexit?
I haven't made an agenda for 2020 yet. I think that it will be completely driven by the U.S. election cycle, and I am in no way looking forward to the year-long nonsense that will follow this. So I am just going to hunker down. I am, in general, overall, an optimist on investments, and will continue to stay fully invested, and wait and see what conspires in the next year or so. But I did look for my 2019 predictions. It looks like I predicted that OPEC would fall apart. Wrong. I predicted that marijuana would be downgraded to a Schedule II drug in the U.S. in 2019. Wrong.
Right in some states.
Well, but there was not a federal level bill or really any progress that happened on that side.
Maybe after the election.
But yeah, I would think after the election. And then my third one was that oil prices would stay low, which finally, ding ding, I got one right. And I think that's probably at least the most important to the reason why that I would stay fully invested is that oil prices are continuing to stay low. There is no kind of economic pushes that would otherwise push that up unless there was a issue with access to the supply. That coupled with really no inflation and a strong dollar makes me want to continue to be invested for the long term. Because
cost pressures are going to be relatively healthy for companies.
Yeah, and even as corporate profits fall a little bit, some of that is, I think, due to the strong dollar. Americans are still spending like crazy. Cyber Monday, Black Friday, records being set. Those 350 million Americans are still out there spending for Christmas, and we'll just continue to put our faith in them.
Doesn't it make you want to stand up and sing the national anthem?
Yes, I do it every morning when I jump out of bed.
Jump out of bed? That seems to suggest more alacrity in the morning than I can imagine you capable of. But
yeah, as I rolled in here at 7:28,
that
unshowered, right after I jumped out of bed.
Yes. Any relatively final comments or thoughts from you, Emil? We've got a couple of minutes that you may want to wax lyrical on any particular point about something that inspired you in 2019 or that you think we should ruminate on.
Well, I'd like to do a prediction for 2020.
Oh, please.
And because I feel the momentum at my back, I'm going to up the ante and
Double
be
down.
more specific down to the days
Oh, gosh.
as to when something might happen.
Okay.
As you may know, I believe that we are living through a period when there's a monetary disorder. That's point number one. Point number two is that the providers of that monetary system are the banks. And so that's where we need to keep our eye on. And here's the specific prediction, is that when the economy is struggling and the general global system is not doing very well, that's when liquidity is tightest. So my prediction for 2020 is that we should look to the dates when banks are trying to dress up their books, and that's when liquidity would become even tighter. So at quarter end, the mid-month period at each of the next quarter ends. So we're actually right now, this is the mid-month period for quarter end, December 15th for the year end.
I see what you're saying. Okay.
And then on either side as well, so January 15th and then March 15th for quarter end number one, April 15th, June 15th, July 15th. If you look back historically, some remarkable events have occurred at not at each of those, but have occurred at those moments. Lehman Brothers, Bear Stearns, several others, the LTCM. These are financial institutions that were unable to gain enough liquidity because everyone else was holding on tight to it as they were approaching quarter end to dress their books. If we continue to live in this global economic slowdown, liquidity will be tight. And if there's going to be a feather or a snowflake, and I'm not referring to haberdashery trends or millennials, but the feather that broke the camel's back or the snowflake that created a cascade, it would be that mid-month of quarter end. Well, I'll see you at the end of 2020, and we'll look at those dates specifically.
So you're going for 8 days next year when trouble could arise. If my maths
that's
is
right.
holding.
That's right. That's
Okay.
right. In plus or minus a day, if you could extend me the courtesy that it happens on the
No way.
16th versus the 15th. But that's the area we want to be looking for banking disorder.
Fair enough. And then I suppose for those who are listening to this radio show and contemplating what life after Brexit might be, it's not at all likely that we'll get Brexit done next year. The UK was going to continue to fiddle around and try and sort itself out and fail miserably because Europe has no interest in being amenable to it. And that, I think, is a problem that the politicians clearly are deliberately ignoring. So expect me to continue to moan, complain, and get generally frustrated about the lack of progress on Brexit, but it will continue to be a problem for markets, and it will continue to be a problem. I think, mindful of what you're saying, Amy, with respect to the US elections and uncertainty like that are never desired and never desirable by markets, and so that's going to create additional risks that perhaps investors should be careful of.
But there's a lot of different risks, risk of opportunity loss. And so to Amy's earlier point, I believe we're struggling a little bit economically, and yet the stock market went up. It's good to be diversified. You never know. So it seems like you have a little bit of a negative outlook regarding Brexit in Europe. I'm a little bit pessimistic about the banking system. But does that mean we should not be fully diversified?
Fully invested, you mean?
Yeah, invested just broadly.
No, I think
I wouldn't think so.
I think it's still prudent to be invested. Just be perhaps slightly more cautious than you might have been. You've made 20% if you've been generally invested in the broad stock market this year. That's not a bad thing. Maybe lock up a little bit of that and position yourself ever so slightly more defensively. That might be an option. But then, of course, everyone should go in and speak to Amy as a professional investment advisor as opposed to listening to us, our random musings, perhaps, Emil. Any last thing you got? I'll give you 20 seconds, Amy, if you want to.
No, I had a little bit written down about unicorn IPOs, but maybe we talk about that in 2020 and things like that. And the new things that came to market and how terribly they did. And
mythical creatures.
Yeah, I wrote down a lot about that Beyond Meat company, but we'll save that. I've
never tried one of the burgers. I don't know what to think about that. But talking of mythical creatures, that's a terrible segue to Santa. It is.
Thank God my children are not listening to the show right now.
I said it was a bad segue. Yes, it is. It is. We are approaching the time where Santa's little elves are about to unwrap their their paws and start delivering presents to people. So may I wish, on behalf of the hosts here, everyone a very festive season. It is a time of year when people consume mince pies and stare blankly at long lost relatives who they
What's
have.
a mince pie?
Oh dear, it's a food group. Yes, and people stare blankly at relatives they have to suffer the slings and arrows of a long drawn out family dinner with. A true brutal blood sport if ever I've seen one. So I wish you all well in the upcoming season as you go through that process. In all seriousness, much fun and happiness to everybody. A request for listeners, though, if you do have topics, we're always very keen to cover something that you find interesting or you find you would like to learn more about. So if there are topics you'd like us to cover, send us an email or tweet us. Our email address is moneysense@candw.ky, and our Twitter handle is @MoneySenseRadio. So do get in contact with us, and we will do our very best if there's a topic you'd like us to cover to indeed cover it on the show. With that, thank you very much for listening, and see you all in 2020. Thank you.